The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Well, we got a lot to talk about here as we get into market analysis today on the show. Everything from the Fed to more bird flu news. We got the sustainable aviation fuel tax credit guidance out as well. A lot of moves in some of these markets. The end of the month, beginning of the month volatility. And I don't know exactly where to start, but we're going to dive through as much of it as we can here today with Mike Zuzolo from Global Commodity Analytics. Hi, Mike. Welcome back to the show. Thanks for joining us today.
Great to be with you, Jesse. And I don't know where to start either. What kind of a show is this going to be?
It's going to be jam-packed, I think, is what it's going to be. Let's start with the Fed. That's top of mind for us here, I think, as we are talking today. Fed leaving interest rates unchanged as expected. Sounded like, though, they didn't give much indication that they were going to lower rates anytime soon. That's at least the initial takeaway I got. Your thoughts on the Fed wrapping up their meeting?
Yeah, I was worried about the exact same thing, and I was watching one of the Chicago Mercantile Exchange's expectation meters on the Federal Reserve and gauging based upon bond yields and bond prices what the likelihood was in terms of when the first rate cut would come. And you're right, with that unanimous decision today and the press conference just starting as we go on the air here, the script was, or the presser that the media release was, really highlighting the idea that they had not made any progress or very limited progress. Lack of further progress was exactly what they said in terms of reaching their 2% goal. That seemed to translate into the idea that before the Federal Reserve came out with their press conference and media update, the Chicago Mercantile Exchange bond numbers were suggesting for September a 57% likelihood cumulatively, and I won't go into details in the weeds on that, but 57% likelihood of a SEP rate cut. After the update came out and before the press conference started, that went down to 54%. So I think your takeaway and my takeaway is one and the same, in that the Federal Reserve is in no hurry whatsoever to start cutting rates, and they're going to sit on their hands for the better part of the summer. I'm hoping, though, that based upon the way the dollar, the crude oil, the gold, all these major market indicators and the bond yields as well, the way they all reacted heading into the press conference by Fed Chairman Powell, that we've baked this into the cake, that there's not going to be any Fed rate cuts until we get to the fall. So that's the key. And I'd say, Jesse, right off the top on today's show, while we joke about not knowing what to talk about, this is the key to talk about if you've been listening to the Market Talk program with Jesse and I for the past several months. And if we're going to continue on a 2009 path of a hard red wheat-led market higher, the key now is a softening of the U.S. dollar, a weakening, a depreciation of the U.S. dollar, especially against the Brazilian, Chinese, and Russian currencies.
Let's lean into that thought a little bit more here, Mike. I'll pull up a chart here looking at spot gold and more, and walk me through just what you're seeing on this chart and give us some more perspective on some of those key outside market indicators here.
Yeah, the theme of today's show is the market rally over, given how we closed out and how the wheat specifically closed out the month of April. Even though the month of April, we still closed positive on the month for both hard red and soft red wheat. And so following that line of thinking and putting that in the forefront of our minds and sticking with this idea of the dollar trade, if we look at an annual spot gold price, and when we're still trading at all-time record highs at this stage of the game on a annual basis at over $2,300 an ounce, and just shy $150 or so an ounce shy of touching again that major all-time high made about a month ago, I believe it was 2-3 weeks ago, if I remember right. But you don't typically in this chart, Jesse, have both going up together. That's kind of an anomaly, and it's kind of like the dance that we show in a lot of these charts and these correlations between two different assets. One moves up, one moves down, and this would make sense from a standpoint that if the bond yields are going up and attracting more investment into U.S. bonds, that takes more U.S. dollars, that takes the U.S. dollar higher. That investment should be leaving safe havens like the gold market and going into the bonds and therefore the dollar, and why the gold and the dollar move opposite many, many times. And this chart going all the way back to 1974 suggests exactly that. What I'm wondering, though, is because the Federal Reserve is caught now with sticky high inflation, are they losing credibility? Are they losing the confidence of the market? Are inflation expectations becoming embedded now, and especially after today's update of no rate cuts? Will we continue to see gold to stay strong? And I think that's our best chance of seeing this dollar break, and that i.e. the idea that the bond traders don't feel comfortable getting into more bonds, and the safe haven mindset stays with the gold because inflation expectations are not going down, they're actually going up again. That's the key, I think, in the month of May. That's the key for me to get another move higher, to get hedges in place.
Well, Mike, you talk about, and we've talked about the wheat-led rally and a bit of a pullback. A lot of this wheat-led rally has been tied to dryness concerns, not only in like the Kansas area, your neck of the woods, and the plains here in the U.S., but in Russia, Ukraine, areas in Europe. So what's the latest you're seeing on this piece of the puzzle, so to speak?
I spent about 2 hours on these two tiny little maps because they're so hard to get the information from. And so I just want the listener and the viewer to understand that this is a major piece of the puzzle, why I don't think the rally is over from how weak we closed the month of April out in the wheat market. And it's because we have both the United States, Europe, and Russia and Ukraine dealing with a significant drought. And I'm not the only one saying this. I just saw before we went on the air another major computer-derived analyst that I pay for through a news wire suggests that the yields in Russia could be dropping rapidly by mid-month. Now, this matches up perfectly with what my client in Sweden has been telling me. This matches up perfectly with what clients in Kansas, who have yet to get any rains, and I talked to one again today, are saying as well. As you get to mid-May, if you haven't changed the weather pattern in eastern Ukraine and western Russia, so essentially the border of Russia and Ukraine, those two areas I highlighted in the blue circle on the bottom, a blue square on the bottom map, Jesse, you're talking about 40% of the wheat production approximately of Ukrainian wheat, and almost 70% of Russian wheat that is dealing with substantial drought issues. And what we're saying here in terms of what these maps suggest to me, like Kansas that has not gotten any rain, these areas of Russia and Ukraine that haven't gotten any rain, it's going to be hard to bring them back to a normal yielding basis. And so this is a major reason why I still feel like the 24-25 supplies of wheat and corn are going down. They're not going back up and being replenished off of 23-24 like the trade has been thinking the last 6 or so months. And this works directly into that next WASDE report when it comes to South American corn production. So these maps don't lie, so to speak. And so this drought is real in Russia, and it could be very close to their really bad year of 2020, I think, in the next 10 days if these models don't suggest any better rains than what they're looking at right now.
And of course, that blue square you highlight too, there's a war going on in that region too that could have an impact with the weather as well. So that's something too. I'm gonna flip one other weather map you shared with the precipitation totals. You know, you got areas in Kansas that are extremely dry, yet other areas of the Corn Belt here in the U.S. getting some copious amounts of rainfall. Before we talk the Bloomberg Commodity Index, your thoughts on this precipitation outlook, what we've been seeing here, and more just in recent days across the Corn Belt, Mike?
If you wonder why the Oklahoma good to excellent conditions in wheat dropped 27% in the month of April, and the Kansas conditions dropped 17%, and the Colorado conditions dropped 12%, you don't have to look any further than this 30-day precip versus normal, because you're talking about 0 to 25% in Kansas and those parts of Oklahoma and eastern Colorado. And you see that still snakes into Iowa through the Nebraska, eastern Nebraska area. So even though we've gotten some very welcome rains in eastern Nebraska and western Iowa, we don't have a lot to work with in the last 30 days. And so I'm going to suggest to you once again, and to the listener and the viewer here, Jesse, that we still need the wheat-led rally. If this map and the Russian-Ukraine map show anything to me, it's that the corn is ready to go if South America production gets lowered. And I think it can be and will be. But it's really still all about the wheat in terms of the supply-demand fundamentals, especially given the conditions, especially given the fact that some of my contacts are also suggesting to me that Europe's crop is still in very tough shape, and their corn planting in France specifically is still having a lot of trouble getting in the ground.
We are talking today with Mike Zuzolo from Global Commodity Analytics here on Market Talk. Mike, let's talk the Bloomberg Grain Index here as we kind of wrap up our grain discussion. Of course, we had first notice day on Tuesday. It looked like there was some heavy deliveries in the grains, and that was some added risk on type of volatility, risk off volatility in the market. But overall, this grain complex here, kind of quiet on Wednesday, but your big takeaways as you watch this Bloomberg Grain Index and just any other final thoughts for us in the grain trade?
Yeah, this goes hand in hand with the gold and the dollar and what we've talked about in the weather and the upcoming WASDE report and the idea that we're losing supplies. And if we're losing supplies, then this market should go higher out of the wedge. And we're trying to break a little bit early, about a month early, out of the wedge to the upside. We'll see where that takes us. If I'm going to be put into a box on the analysis and my wheat-led rally and my 2009 model year goes bye-bye, it's going to be because of the support line, that red trend line support that we've tested essentially the last 3 months in a row. If we take that out on a monthly close, I've got to get protective. And this is nothing new. This is something you and I have been talking about for the better part of 6 months at this point, Jesse.
Well, a lot to keep an eye on here. We'll see what happens ahead in the month of May. Let's turn our attention to the livestock trade, and you share charts and pictures with me. I'm going to share one with you just to start this conversation. This is the headline out from Politico on Wednesday. Officials warn of risks to certain groups of people amid bird flu outbreak in cows. And this report came out about the same time that the cattle futures kind of turned on Wednesday. I'd have to think that, again, this constant news cycle about bird flu having a bit of an impact here, Mike.
Having more than a bit, I think a lot. And USDA also came out and said they were going to be testing more types of food. And even though they have not found anything, I think the headline news is working against us. I think that theory that we talked about 2 weeks ago, probably now, that's been proven at this point. The funds don't like this in the news. They're going to keep selling it, in my opinion, if this is in the news. And I'll put it very bluntly to the agriculture sector right now, is that while the funds are very net short the grains, and I think they need to be asking themselves, do we really want to stay this net short, given what we talked about here today, Jesse? The flip side of that, the mirror image of that, is what's happening in the livestock. There's still managed money funds net long by a good degree in the cattle and in the feeders. And do they really want to stay net long given what's happening? And I think this is where the summer grilling season and the cash prices really have to come in right now and support this market in a meaningful way. So, I mean, I don't want to oversimplify this market, but to me, we're doing enough technical damage now in some of these longer term charts. We really got to pull things together here and fight back from this headline news with strong cash markets.
Well, you've got some great analysis for us here too that I want to get to. I got a chart looking at ground beef and live cattle, and you think about some of the damage we're doing technically on charts and different things you're watching. I mean, talk to us a little bit more about this. What are some of the things you're keeping an eye on here, especially with this chart specifically, Mike?
Yeah, ground beef prices are a big piece of my analysis in the short term, because it really gives me an idea of whether the market, the consumer, can bear additional consumption and beef taking into more of the retail feature space by grocery stores. It's really all about that. You get the things on sale, the consumer buys it, and he or she likes the beef taste better, so you can bump that price up a little bit more against the pork and chicken typically. What we're facing here, though, now at a $3.16 price of 80% ground beef is the highest level since early 2022. Fortunately, gasoline prices are not still going higher, but we're putting an immense amount of pressure on a consumer now that is dealing with high levels of debt and an uncertain stock market, and still not certain about what's going on with the gasoline prices. Now, is this 80% ground beef price going up because there's less cattle available to slaughter? That's a real question. That's a possibility. But the chart, clearly shows you, especially since the 2020 lows made in ground beef from the pandemic, that they typically run together for a while, but after ground beef gets to a certain price level, it really starts to negatively impact the live cattle. And I'd say that's the pushback at the retail space and the featuring from the grocery stores and restaurants.
How about the feeder cattle complex? Let's pull up the monthly chart here. A couple wedge patterns it looks like we're continuing to keep an eye on, but a lot of the same concerns I know here in feeder cattle versus live cattle. But what are you seeing here right now, Mike?
This is where I'm going to step out a little bit on the analysis and suggest that because of the ground beef, because of the fact that June fats did close below that April 19th cattle on feed pre-report low, where I thought we would have put in a low based upon the supply side from the cattle on feed numbers, I think the feeders are the ones that are going to have to pull the heavy weight here. They're going to have to be the ones, especially in the cash market, with the cash index at 247 against the May futures at 240. And some of the cash prices in Missouri, I saw today, what was it, mid 7-weight steers, I think 44 head went for 270 in Missouri on Wednesday afternoon. So my take here, Jesse, is feeders got to pull the fats out of it, because the consumer side is the weak link, and the fat cattle are going to be the leader to the downside in all likelihood. Feeders the leader to the upside because of the cash and the tightness of the supply. So we're wedging in this monthly feeder cattle chart. We need to break higher and break through that double top. I think that can come in and save the fat cattle market, because if we do break higher, we're going to probably break higher with the cash market leading.
I don't want to forget about folks who might have feed needs here. One more chart you shared with us today, looking at the feeder corn ratio. Any big notes for us here, Mike?
Yeah, this is a big deal to me because we're eating into the major trend line that we've held all the way since the early 2023, late 2022 time period. Feeders are going below the corn in the ratio in terms of support. I believe, I don't have any proof of this, but I believe this is an extremely valuable piece of the puzzle when it comes to the feeder sentiment. So this is my weak link in terms of what I was just talking about. Why would the feeders lead us higher when they're breaking through on the feeder corn ratio? So this is a big deal to me. What we would want to probably see is friendly, supply side friendly corn news that takes away the pressure from the feeders to a degree. But this is certainly a chart we need to watch, especially if I think the South American corn production is going to drop substantially. And the price in Brazil is already running about $20 a ton higher in corn than the Gulf of Mexico here. So as you say, this is a feed need chart, and I'm really eager to get feed needs locked in if we see a pickup in that wheat or any kind of supply tightening on the next WASDE report for corn.
Well, Mike, we covered a lot of ground. The only other thing that I haven't asked you about that I mentioned at the top, I know we got the SAF tax credit guidance, and that's all fresh, and you're getting both sides of this here, folks who are happy and say it's a good base work. Some folks are not happy with it. I didn't really feel like that had much of a market impact, though. Maybe that's something we'll have to analyze moving forward. Is that kind of your feeling, that it just didn't have that much of a market impact on Wednesday?
I think it did in the soybean oil, but having said that, I said to clients last night on my blog post that maybe we're putting a low in because the bean oil, I think, has factored in this news now that it's actually out. For ethanol, I was wondering whether corn would kind of sidestep this whole issue of the SAF and this new, what is it, GREET, or what's the acronym? I can't remember.
Yep.
Yeah, this new model, whether we would sidestep it completely, because the EPA just signed off on taking E15 this summer. So is it really going to hurt us this summer? And I'm wondering whether the market is just not looking at that, saying, okay, demand is secure. Ethanol data was good today for the week. We had higher production and lower stocks. So as long as I keep seeing that, I'm less nervous about SAF here in the short term. Domestic demand is holding firm. The big gray rhino people talk about black swan, the big gray rhino, that big known out there that we don't know what it's going to do to us, is that HPAI. If we do lose consumption, we flood the market with weights dropping in the cattle, and we flood the market with market-ready cattle. That's going to hurt us down the road in the feed. So I'm really watching those dress weights very closely.
Mike, good stuff as always. If folks want to reach out to you for a conversation, want to talk with you, take a look at your analysis, how could they get in touch?
Best place is globalcomresearch.com. It's globalcom with 2 M's, research.com. As you've heard before, you can get a free trial, and you can also look at a product services brochure. So please take a look at that.
Globalcom with 2 M's, research.com. With that, Mike Zuzolo, Global Commodity Analytics. Always enjoy it, sir. Thanks for being with us here today. Have a great one. We'll talk to you again soon.
Thanks, Jesse. You too.
That's going to do it for the show today. Find us at markettalkag.com. I'm Jesse Allen. Have a great afternoon.
Make sure to subscribe to the Market Talk YouTube channel. You can watch our latest interviews with top market analysts in the country, find bonus content, and much more. It's easy. Just go to youtube.com/@markettalkag and hit the subscribe button. Or you can search for Market Talk Ag on YouTube.